Veda's Consumer Credit Demand Index for the June quarter shows mortgage inquiries are seeing the highest level of growth in 3 years, and overall consumer credit demand is up nearly 4% on year, although that is down from the March quarter results. So, does this point to better housing market conditions or perhaps some improving sentiment out there? To bring us up to date and bring us some in-depth analysis on the survey and what's behind these moves, we're joined now by Angus Luffman, the General Manager of Consumer Risk at Veda. Angus, thank you so much for joining us. Just firstly, if you could give us an overall view on the results that you had in this latest quarter when you're looking at mortgage, personal loans and credit card applications.
Yeah, sure, Brady. So our unsecured credit, which is measured by the Credit Demand Index, was slightly softer compared to previous quarters at up 4%. It was up 5% the last 2 quarters, which was some of the strongest results we've seen. That we saw as really underlying results in the personal loans, which previously been driven by a surge in car sales. That surge in car sales is now looks like it's been a bit softer in the period. I think one of the big changes, though, as you talk to, is the mortgage inquiries. Really strong growth there, and that has come really nationwide. Come from some continued strength in some states and improving trends in others.
And in terms of that mortgage inquiries, up what 7% June quarter,
yep.
and also up nearly 2% from the June quarter last year, and up as well in March.
Yeah, so just strong underlying trends. 7%, strongest result in 3 years. New South Wales, Northern Territory, WA, SA continued strong signs, but some good. Whilst the results are still flat in the other states, the underlying trends were positive. And the context here is that what we've seen in the demand for mortgages over the time is that house prices and housing turnover are indicated by this index, sometimes 2 to 3 quarters in advance. So there's really positive territory there.
So it is quite a leading factor in terms of where we will see sales going.
Yeah, absolutely, because what this measures is the intention to spend, because it's about applying for credit, and so if there's that intention, that obviously is a lead indicator to what comes down the track. And we've studied this over a long period of time and certainly seen that correlation.
What do you think? I mean, the fact that there's such a big volume there, the house price growth, you think for the near term, looking at Victoria, Queensland, though, it was still up, just a weak result there, yep. But you think, though, that will follow the other states as well?
Well, there's certainly some positive momentum there, and typically there is momentum in this type of trend. It doesn't sort of flick around so much unless there is an underlying government type piece. So sometimes we see a stamp duty change or that type of element coming on a date. We'll then see a trend change quite dramatically from quarter to quarter. But typically otherwise, if there's momentum, that momentum should stay, and for a period at least. It also, equally in housing, as observed in different regions, we see it in different states growing at different rates. It's a common thing that we see, but I think that underlying trend's there. In terms of the states you talked about that are still soft, certainly in Queensland, if we go into the underlying monthly trends, they've now had 6 positive months in a row, and so that getting into positive territory from negative territory. So that's a pretty good sign, and certainly indicates momentum trend that's there. New South Wales, Northern Territory, the others, just continuing to be strong as they've been over the past 2 quarters.
And just in mortgage inquiries in WA, as you mentioned there, I mean, still the strongest result there, even though, you know, we keep hearing about the waning mining boom.
Yeah, so that's something that's just continued to be observed. It's softened for a bit and then it's maintained its strength. I think in terms of underlying economics, we'd probably look at the credit demand or the unsecured credit demand in those states, and certainly WA, the personal loans, credit cards combination is softer as it is around the rest of the country. And so in terms of the sort of underlying links to discretionary spending, that personal loan and credit card is the indicator there, and that's the one I'd look at for that.
Well, did you find that surprising that personal loan applications have eased from that high level seen in March, even though, you know, in the June quarter obviously we had that rate cut in May, sorry? Yeah,
probably not, simply because we watched the consumer sentiment come down in April and really stay down over the quarter, and so that's what consumers are feeling. Again, unsecured credit demand is measuring their plans or intention to spend, so the link between those two has been fairly solid to watch there. So when we saw that consumer sentiment come down, that's probably not something that is overly surprising. I think, again, a surge in car sales that it has come on from a range of factors such as exchange rates, interest rates, various things, offers in market, means that effectively that can pull forward demand also. So you get a large demand that eventually has got to peter out. So I think it's one we want to watch over a period, and I think certainly I wouldn't anticipate too much changing in that in terms of trend this side of an election, and certainly if unemployment continues in an upward trend, once those two factors, if they're different, then I think it'd be asking whether which way the trend's going then.
So you can't sort of draw a conclusion that people are, rather than buying cars or household appliances, they're now going to start buying houses?
Yeah, I think that what we see there is they're related to different factors, and certainly whilst there's a strong positive trend across the country and with interest rates direction indicates that should continue, they're typically different. They measure against different things, and certainly are more regional based. We see in mortgages as against the sort of unsecured credit where we see nationwide trends playing out.
And just finally, in terms of credit card applications, a slight pickup there. What have you been seeing here? Has it sort of changed much, in line with the changes you've been seeing in mortgage and also personal loans?
Look, I think the biggest thing we saw in credit cards was we saw a one-off spike in June. Now, typically there is a strong period in June. That's where financial institutions or card companies do a lot of campaign activity. And this was even stronger in this June. And so it's 1 month. The other underlying trends in the month were generally soft or negative. So I think we'd want to see what that looks like, simply because the direction on credit cards has been sort of soft to down. Certainly, if I go back over the past 6 months, the overall result is slightly better than what it was in what we saw last year, so that's positive territory. But there was really a big spike in June, and so that's something we really want to see what it looks like over the coming quarter.
Your overall sense, though, is the RBA sort of move to try and drive that recovery in the housing market? Is it starting to work then? Can you draw that from this?
Well, we can certainly draw out there is stronger housing demand. And so what are the factors that sit around that? I think again, there was a real pull forward of demand that we saw off the back of the incentives back in 2009, 2010 off the GFC. That's now 3 years ago. So you've now got a period where that demand, other factors will play into mobility of market. So I think that those factors would continue to play out, and I think that momentum trend that we talk about there, given that there's apart from the interest rates perhaps, there's no other sort of specific stimulus sitting around it that's new, that trend would seem to continue.
All right. Thank you so much for taking us through the latest results. Angus Luffman there from Veda. Now,